Take us through it. You're up in profitability. You're profitable, by the way, but you're up in profitability, up in manufacturing, up in sales. How did it happen?
A lot of hard work, as you can imagine. Obviously, a lot of work in terms of operational efficiencies. That was the first 2 years of the plan, and now we're starting to reap the benefits of the new cars, starting with the DB11 V12. Late last year, we also launched the V8 version, and then we've got a cadence of cars coming, which will mean that this level of profitability is just the start.
Well, as I say, you had been losing money. Now you've gone into the black, and the swing is like 250 million pounds. That's
yeah,
a
quarter of a billion pounds. It's quite a remarkable swing.
And you're up over 5,000 units a year now. You were drifting down 4,000 and southward. How are you making more cars and getting more money for them?
Well, you're right. Retail sales last year were up 58%, mostly on the back of two things. The new DB11. It was 13 years in the making, if you will, from between the original DB9 to the DB11, so a brand new car, three derivatives, the V12, the V8 and the Volante, and also a lot of emphasis on how we sell and how we bring the Aston Martin experience. Basically 5,000, just a little over 5,000 cars, all hand-built, all made in the United Kingdom, very charming, and what we're trying to do is sell that experience, that lifestyle, to more customers all over the world, and it's starting to work.
So as you say, when you came in, you put a strategic plan in place to turn things around.
Yes, it was called the second century plan, we called it.
Exactly. So where are you in that plan at this point? How much farther can you take this?
There's a long way to go. I mean, basically, we divided the plan over the course of 7 years into stabilization, done. Operational efficiency, turnaround, done. We're right now in the core rebuilding, which is replacing the three main sports car models, the DB11, the Vantage and the Vanquish replacement. The Vanquish replacement will be the back end of this year, the Vantage replacement the front end of this year. So within 2018, that remaking of our core is done, and then we move into portfolio expansion. And this starts with an SUV, which we make in a new facility in Wales, and then is probably followed up by 3 more cars, a mid-engine sports car, and potentially 2 luxury sedans, utilising the name of Lagonda.
So when we talk to mass market automobile companies, unlike Aston Martin, when we talk to General Motors, Ford, people like that, Nissan, your old company,
yeah,
it's all about electric vehicles and autonomous vehicles. Where is Aston Martin in that process?
In a different place, but not divorced from those trends. I mean, if you look at the major technology trends in auto, it's car sharing, it's autonomous vehicles, it's electric vehicles, and it's connected cars. Connected cars we can't avoid. It's just a hygiene factor. We've made a strategic choice to also go after electric cars, and we'll launch our first electric car, the Rapide E, in 2019, and we want to lead the luxury segment with that technology. Car share, not really appropriate to an Aston Martin, not today anyway. And autonomous vehicles, I have a mixed view of autonomous vehicles. I think what the industry calls stage 1 and 2, the car can park itself, it can keep you in lane. That's probably relevant to an Aston. Stage 3, I don't think it's appropriate to an Aston. I actually don't think it's appropriate full stop. But stage 4, when you can have full autonomy, this is maybe something that we're looking to develop. And of course, we'll develop that through partnerships.
So partnerships, exactly. You have a partnership right now with Mercedes. And
yes, we do.
Mercedes is powering some of your vehicles. But as you look at this, we talked to General Motors, we talked to Ford. It's a big investment of money. Can a small sort of niche, specialized car company really survive in that world? Mindful of the fact that Geely is just invested in Daimler,
yes,
has already bought Volvo. Do you need partners, or do you need to go public with your stock to raise more capital?
Well, the answer may well be both. I think that the relevance of an IPO or not is not relevant to that particular argument. But we are making a new kind of a company that can survive on 17 to 14,000 very high-priced, very profitable cars a year. But it can survive because of its partnerships. And the Daimler, Mercedes-Benz owns 5% of us. That gives us access to technology being developed in a world-leading company, and that's how we can continue to stay relevant and updated. So I think we're making a new type of company. It doesn't rely on 10 million cars a year. It can be very profitable on that sort of 7 to 14,000 cars a year, but only by having a big brother that can help it out.